Well, hi again. It's TV Barbados, and we are to part two of that question from the CSET Principles of Accounts. Looking at D Giannapoulu store. If you recall, last time we did the income statement, and today we're going to do the balance sheet. So we're doing the balance sheet to that question. So I hope you still have your answer from the income statement, and let's see where we go with this. Alright, a little reminder, the balance sheet consists of 5 classifications, right? Non-current assets, current liabilities, non-current liabilities, and the owner's equity. Also note that a balance sheet can be presented either to show net assets equal net equity, in other words A minus L equals E, or to show total assets equal equity plus total liabilities, which would be A equal E plus L. The balance sheet can also be displayed either in order of permanence or in order of liquidity. So there's no law saying you can't do it one way or the other. It's all up to you. The key thing is that you must maintain the classifications. So the entries in the classification must remain faithful to the classifications. Alright, well, that being said, let's just bring back the question to your memory. So here's the question. You would have done this in the last video. So let's get to the task ahead. As usual, those of you who already know how to do the balance sheet, you can go ahead and try the question. Those of you who are not so sure, well, you can work along with me and see how it's done. Alright, so what happened is I have the steps here laid out, and the question is still to the left. Remember, the thing about a balance sheet is that you don't really have to do any particular calculations. Once you've used the notes, you should be able to take the information from your income statement. Alright, anyway, so I'm going to be using the net asset approach. So I'm doing A minus L equal E. So let's start. So I'm going to start off with identifying the non-current assets. It says disclose the book values of the non-current assets. So I want the book values. So the non-current assets in this question would have been the vehicles and the equipment. So what I want to do is to enter their book value, their cost values first, and I'm going to take away the depreciation, because remember, book value is cost minus depreciation. So the depreciation for the vehicle was 25,000 plus the 8,400 that we calculated on the income statement. So that means that we're taking away a total of 33,400. All right, and for the equipment, whose cost figure was 45,000, and we took out previously it was 12,000, and this year we took out 9,000 for a total of 21,000. Good, so I have the value of the non-current liabilities. All right, well, next I go to step 2, which is to get my current assets. So the current assets, remember, those resources that I don't plan to keep for a very long time. So I've listed out the current assets that are stated. We have the inventory, the accounts receivable, and we know that there was a provision made on those accounts receivable, and just like depreciation you have to remove that provision because depreciation is also a provision. So if we remove that, we would also remove the one on the receivables. All right, and the prepayment is also something that we have to add in because remember, a prepayment occurred. It says that we paid too much money on the rent. All right, so that's prepaid as well. So let's put in the information. All right, so just so you will know what happened here, the accounts receivable, if you recall, would have been $3,800, and that $400 by that was written off. I have to remove that because it is no longer. I'm not going to get that money, so I'm going to take it out. All right, so that would make now my figure to be 3,800 minus 400. Sorry, I can't write all that in this space. So I'm just going to be doing it, talking to you and writing it. So that will leave me with 37,700, of which I'm going to take away the provision that was made, which was 1,143. All right, that's the provision that was made. So let's make that a little smaller. Let's change the color. Right, so that would mean now that the correct figure for the receivables would be 37,700 You work it out already? 37,700 minus the 1,143. And what did you get? Give me that number again. 36,557. Okay, assuming that you subtract it correctly, that's the number. The prepayment, well, it says that we paid too much money on that rent. That was the only thing that was prepaid. So we know that that figure was 1,740. All right, good. And so that we have our total current assets. Now in my method, I'm going to actually take away the current liabilities from that. Those of you who are doing the total asset approach, you will just add that 89,807 onto the 85,600, and that will give you your total assets. But I'm going to go down one step further, and I'm going to do something called working capital. All right, so the accruals, we had that we had owed $500 on the insurance and $210 on the motor expenses. So that means that our accruals would total $710. All right. So that means that the total current liabilities, when I add on the accounts payable, will be $26,710. Now step 4 says just subtract my current liabilities from my current assets and I will get working capital. So obviously in this method, working capital will feature. So I'm going to work it out now. I'm going to subtract the current liabilities from the current assets, and I get 63,097. And what I could do is that I can add those two numbers together. All right, so I'm adding my non-current assets to my working capital, and it tells me that I have 148,697. All right, so now I will put in any non-current liabilities. Well, when I look into this question, I actually don't see any, so I'll just put it there for your benefit, So there are none. All right, so that would suggest then that the answer that I had not too long ago, that 148,697 would be my net assets. And so all I have to do now is to prove that the 148,697 is my equity. That's all I have to do. Alright, so equity, as you know, is the capital brought forward, add the net profits, minus the drawings, and hopefully we're going to get 148,697, suggesting that we didn't make any mistakes. So let's see. Alright, so I had already transferred the net profit of 106,797. The capital at the beginning of this question was what? The capital was 65,500. And the drawings, where are they? And the drawings were 23,600. And there we have it. My equity. If you want me to write net equity here, you can do that. My equity is 148,697, and so my balance sheet balances, suggesting that all of the information was correctly handled. And so all I need to do is tidy this up. So I'm going to put in my lines and have a nice tidy balance sheet. Alright, I think I have all my lines in. Everything looks nice and neat. Well, just want to thank you again for watching. I hope that the video has helped you to master the balance sheet. And until next time you tune in to TV Barbados, do enjoy a good day and keep practicing.